Okay, today is Monday, September 16th, 2024, 7:10 p.m. Eastern Standard. Just posted the weekly market report, so that will be landing in the Discord channel momentarily. This week is a big week. Fed interest rate decision, FOMC meeting on Wednesday, 2 o'clock. So we are likely going to see the Fed cutting rates for the first time in quite some time. We're starting to shift into rate cut season. And what's really interesting that I can pull up here in a separate window is that the Fed is actually being priced in for two rate cuts. The Fed Watch tool here, so I'll pull this over. I find this really interesting. I'd be a little bit surprised if we get two rate cuts, but that is currently what consensus is showing, and that's currently what's being priced into the market. 62% chance that we see two rate cuts. I'm reading the argument being that we want to get two cuts out because they're not going to cut in November during the elections, which is when the next FOMC meeting is. So they want to get two out of the way right from the get go and not be doing that during elections. I don't know how much I buy that. They've tried to say that they remain independent from politics. So I don't know why they would need to front load rate cuts when they could just simply cut again in November if that's what's necessary for the economy. I'm going to be surprised if we see two rate cuts, but that's what's being priced in right now. So we're going to have to wait and see on Wednesday, big day at 2 o'clock. And there's a lot of interesting trades that are going on right now. And I'm not going to cover everything in depth here because I've got the weekly market report I'm going to publish soon. But what I want to highlight is a couple of things. One being that we're kind of chopping sideways here for a lot of equities. It's hard to find direction. And for other positions, we're actually seeing approaching all-time highs. So like the S&P is getting very close to all-time highs, but we've just had this downward like massive sell-off, which looked very bearish. And then what did we do? We recovered. And then we went and we broke down again. And now we're back on this bull tear that's about to approach all time highs. NASDAQ is lagging substantially. This is really just chopping sideways to lower. Same thing with the Russell. Very, very hard charts to trade here. I've been saying I like the Dow going long, and now the Dow is at all time highs. Um, it's just a very difficult market to trade. NASDAQ is lagging, Russell is lagging. I I also see in positioning both of those are over. They're crowded on the long side for speculators, so probably not a good idea to be going long Nasdaq or long the Russell right now. It would make a lot more sense to go long the Dow or long the S&P. However, the Nasdaq and the Russell have some room to catch up, so it really is anyone's game as far as the bulls versus the bears. It's just a difficult market to trade if you're trying to trade these indices. I like the idea of adding to positions. I've added in QQQ, which is the NASDAQ on the last sell off. So I got in at a decent price around 450, 455 on the QQQ. I see some room there to just add on any dips. So any further dips adding to the long side. And the big question is what happens to markets this week? If we get one rate cut, we get two rate cuts, does it really matter? I don't know if it necessarily matters if it's one or two. I think it can set up for some interesting news failures for us to enter other positions if we do start to see one rate cut versus two, and what happens to gold, what happens to this market, how do things react to one or two, depending on what the decision is. I can see it sell the news event. This is just a prediction. I don't know what's going to happen, but I could see a sell the news where the market dips on the rate cut decision. And then I see us taking out all-time highs on the stock indices. I see Nasdaq recovering. I see the Russell recovering. I see the S&P breaking out. I see the Dow breaking out. So I think we get to sell the news right before a tear back to the upside. But that's really just my speculation. I have no real idea of knowing what's going to happen. I don't even know if we're going to have one rate cut or two, or even zero. Who really knows at this point? So I guess we'll find out on Wednesday at 2. But for positions that we are looking at right now, I'm going to just point out the main three trades that we're in. So one being the long on crude oil. So we accumulated positions down at $67 here, and that's just been really, really great as far as the recovery here. We had this dip all the way to 65. We're now starting to see a little bit of a V-shaped recovery. I would love for us to take out $74 here and then probably find a resistance up here at this resistance line that's come down. Probably going to hit resistance around that $74, $76 mark. If we can break out of there, the next one we're heading towards is $79. That's our next real point of resistance. So would love to take some profit at 74 and then take some profit around $79, $80. We're going to see. But the whole market is so bearish energies right now, and everybody's so crowded on the short side that people are talking oil's going down to $50. I don't see that with this chart right now. I see them getting the rug pulled from underneath them if they're really trying to go short here. And I see energy starting to rally despite whatever happens with the interest rate decision. Other positions, silver. So we got in at silver at $28, which hindsight 2020, this was a really, really great trade here to get in on. I wish I was in a little bit larger of a position. We've seen this breakout from this near term resistance. And we are now starting to, we broke out of resistance here on this other resistance line. We're now starting to potentially form that as support here, a support line now. So I would love for us to break out to these near-term highs around $32.50, $33. I would love to see silver do that, and I would probably take some profit there. We may even move the profit target. I mean, if silver can really break out of these, the highs from back in May, that would get really interesting here. If we broke out there, I would probably switch to a trailing stop and trail that trade. But we're in some really healthy profit here. Up, I don't know, I think it's a little over $3,000 on this trade since we're in at 28 and we're at 31 right now. So really healthy profit there. Gold broke out to all-time highs. I don't like the idea of going long on gold right now. I would like to find a news failure. It's very crowded on the long side. Would love to see a news failure. So potentially Fed only cuts once. How does gold react to that? Or do we cut twice and then gold sells off where it should be bullish? That would be an interesting place to short it. We're really gonna have to wait and see for that FOMC meeting. Volume is very low in the next couple days here. Monday was light. Tomorrow's going to be light just because of the FOMC. Palladium and platinum really breaking out here, so I like potentially shorting palladium here if we can get near these near-term highs and find a reversal around $1,100. When palladium falls, it really just continues to fall down. So we see swings some days of 4 or 5%. I would love to see us bounce off of this 1100 to 1110 zone and then start to sell off. And I would probably execute a short position there. And then we're in on a bit of a curve steepener, a yield curve steepener. So we are currently shorting the 30-year Treasury bonds, and then we're looking to go long the 5-year Treasury notes. I'm just waiting for this position to enter to go on the long side, and I am in on the short side for the 30-year bond. What I could find really interesting that I suspect happening, but I don't know, is markets pricing in 2 rate cuts. We only get 1. How do bonds react to that? I think right now 2 are priced in. If we only get 1, I think bonds sell off. So that would be really great for this current trade that I've entered in on. So we'll find out there. That's what we're currently in. So that's what we're looking at. That's what we're in. Only other thing of interest is the yen. It's actually having a little bit of a sell-off right now, but there's also a gap fill on the chart here. If we go to the daily, there's a little bit of a gap to fill from the contract rollover. Yeah, the carry trade thing is still going on. Yen's actually at near-term highs. We're coming into some resistance here, but do we sell off or do we rebound and go up? It's hard to go short here, even with the positioning crowded, for a good opportunity for us to go short. It's just a little bit of a challenge when you're at near-term highs. I don't like shorting things that are at near-term highs. It's the same thing with gold. We have to really wait for a reversal here. There's no reason for us to be shorting something that just hit an all-time high or a near-term high. There has to be a really good case for that. So that's kind of what I'm looking at. Again, you guys can read it in the market report. I think these are difficult markets to trade as far as equities. I would be accumulating on any dips in like more of a long-term portfolio position, not for trading. I suspect that we're probably going to get above all-time highs after the dust settles with the rate cuts, despite what happens, whether it's 1 or 2 cuts. I also think The market seems to, and I write about this in the conclusion final thoughts section, but I think the markets, no matter what way it is, if it's 25 rate cut, 25 basis points or 50, I think both of those scenarios can be seen as bearish. 25 basis point cut, oh, we're entering rate cuts. That means that the market is slowing down. We need to wait to stimulate the economy. That's bearish. Or 50 basis points, it's really slowing down. Or what extra data does the Fed know? Like, why do they have to do 50 points? Are they behind the curve? Are we needing to play catch up? That's really bearish as well. And with that, I think everyone's thinking the same thing in the market. They're all thinking that either way it's bearish. And to me, what that means is it sells off after the decision and it looks bearish, and then it probably turns into a bear trap and we end up going all-time highs. That's my prediction. I don't know, but we'll wait and find out. It's not something I'm going to like actively trade. I'm in on a long portfolio across my just general long positions. So that would benefit. I think the bond 30-year trade would benefit really well on the short side that we entered, if I'm right. And I think that can also set up an opportunity for gold to potentially have a reversal and for us to go short. We're looking at around a 2650 target for gold right now, from which we would probably short if we see a reversal from there. So those are my thoughts. For what it's worth, I'll do another recording here on Wednesday after the FOMC decision towards the end of the day when the dust starts to settle. And that should be an exciting recording. So looking forward to chatting with you guys then. Until then, we'll talk soon. Thanks.